Hey, we're going live. I'm a couple minutes early, but I wanted to come in so I could let that have time for people to find us and get on here with us. We're live. I'm in my classroom using the camera on my computer, so it's not the fanciest, not the sharpest, not as good as my webcam. I need to make sure I carry a webcam around with me when I want to do these live. Can everybody hear me okay? If you're the one person who's here, if you can hear me. Hey, can you hear me fine, Miss Deborah? Can you hear me okay? Well, you were there. There we go. Oh, you can hear me good. Okay, cool. Let's give a few minutes. A few minutes. Hello, Angela. Hello. Oh, good. You hear me okay. I do have a microphone. My mic sounds nice. I do have that going. Let me pass the word that we're here. I was looking at some of the trades. That's what we're going to go over here is the trades that we selected over the weekend. And this run up, this little rally has been have been wreaking havoc on some of those trades. Well, not all the way, but it's just they've been challenged. Oh, come on. They've been challenged. Let's get on with it. Let's get on with it. Y'all tell people that we're on so nobody will miss us. All righty. I think I'm done with that and can now focus. Potentially. Of course, as soon as I get ready to get on this call, my husband calls. Not right now, sir. I'll call back after my live. I'll call back after my live. Hello, Angela. Hello, Deborah. Good morning. Good afternoon. I guess afternoon now, 2:00. Hey, Adrienne, how you doing? The sound is nice and clear. Oh, good. Wonderful, wonderful. Okay, so what we're going to do this afternoon is I'm going to look back at the trades that we looked at over the weekend on our Sunday evening call. We're going to look back at those, see what those trades are doing. All right. Hey, Tamar. And then the market isn't really doing a whole lot right now. I was going to look at, and we still can, I was going to look at what SPX has been doing today. And it's doesn't seem to be doing a whole lot of nothing. Doesn't seem to be doing a whole lot of nothing at this point. See that little doji? This is today's candle. Is this little doji baby right here. This one right up here. We're actually going to talk about dojis in our charting workshop this coming weekend, this Saturday. If you haven't registered for that, definitely think about getting into the charting workshop. We're going to learn how to read stock charts, and part of that includes candles. So this is the SPX candle for the day. We had a big old gap up yesterday. So there's a gap here that needs to be put onto this chart. And this gap between these two is there, and the market is now basically sitting still. We're not too far from a resistance area anyway, though. The resistance that is just above where we are actually is right in this area where, what's this, 45.30 is where the resistance is. Anyhow, there's a little bit of a gap here, which looks like it was filled by price action, or at least by the wick today. And currently we're at 45.10. So we got up to within 10 of the resistance and seem to be just chilling. We just chilling right now, deciding what to do. All right. I wanted to share with you the trades that we looked at the other day. We looked at some, and these we set them to be, most of them were for further out expiration. So even though, this week they may be looking like they're, doing their thing, uh, you definitely want to, if you set them for a longer period of time, you want to let the time run. Let's start looking at Siri. Siri was on the cash secure put list, and it's on the covered call list, covered call. So it was in both places. But Siri got a little bit of a beef up when I think Berkshire Hathaway, I believe I read that this morning, that Berkshire Hathaway got interested in Siri, and their price has popped. And you see that this red candle basically popped up, did not sustain there, and it's been on a red all day. It's been coming right on back down. I guess, what they say, buy the news, sell the rumor, or it's the other way around. Buy the rumor, sell the news. If you got questions or whatever, please put them in the chat. And when I close out of sharing, I can see the questions. But I think it's buy the rumor, sell the news. Buy the news, sell the rumor. Other way around. Buy the rumor, sell the news. That's the way I believe it is. So the news was that Berkshire Hathaway is interested in Siri. So if we're selling the news, might be good now to go do a call credit spread on top of it, on maybe up into the 550 or something like that, because it's still definitely, and it's got a lot of gap to fill coming back down. So that may be the move for Siri, is to do a call credit spread on Siri, because I also said if you didn't do the cash secure put, if you didn't sell the put and you didn't do the cover call, you basically could put it into credit spreads. But if you sold the put, if you sold a 4 cash secure put, which is what was on our graphic, was to sell the 4 strike of the cash secure put. Well, we're, way high as far as Siri goes. We're way high above the $4 mark. The $4 mark is down here below 2 supports. So if you had the cash secure put for Siri, then that trade is doing quite well. If you were doing the covered call on Siri, the covered call would have been breached at this point. Or if you were doing a call credit spread, that would have been breached if you had the 5 strike. But let's look what would be now. We only got a few more days left this week for this trade, so there won't be much premiums on it. But 5.56, which would 5.5, if you're doing a call credit spread up there, you would collect $4 or $5. It's like $5. And that's a 10% return on your $50. 5.56 is a 50-cent spread. You collect $5. Don't forget you got to pay about $1 in fees. So that's a 4%. That's about an 8% return on your money. $4 out of the 50. That wouldn't be so bad. And then you could go look, if you wanted to go out one more week, maybe you did 5.56 in a subsequent week, and you collect $8 for next Friday. $8 divided by the $50 of collateral you have to put up, that's a 16% return on your money. Yes, it's $8, but it's 16% return. All right. So we're looking at 16% return in 9 days. Can't do that too many places. All righty. What was on it? What was next on our list? Next on our list was not that. Next on our list is Carvana. Carvana cash secure puts at the 28 strike. Carvana cash secure put at the 28 strike. Oh, let's go look at the chart. 28. The current price of Carvana is $33. So the cash secure put means you want it to stay above your $28, and it is $5 and some change above that. So that trade is also going good. Carvana trade going well. TQQQ 38 strike. TQQQ, that's the mini of the triple Q. It's at 43, also doing fine. We had a 38 strike, and the current price is at 43. So it's $5 above that strike. All 3 of those cash secure put trades are good trades. Oh, come on. Here we go. All 3 of those cash secure put trades are good trades at this point. Covered calls, you would do covered calls only if you owned the 100 shares. You do the covered calls. This should say Groupon, not Groupon. You would do covered calls if you owned 100 shares. Or if you purchased 100 shares in order to do covered calls, that's when you would do those. And you wouldn't mind, if you don't mind if covered calls get breached, because that means you're going to release your shares for a higher price than what you paid for them. That's a good thing. Yes, yes, yes. Now, over here, we talked about, this is the call credit spreads. Cisco, we said, don't trade this week because Cisco has earnings. I want to say it's today after market closes, and you don't want to sell stuff in the middle of earnings, because that's just asking for it to pop right on through your zone. But let's look at United Airlines at the 39.40. Now, I was actually shocked. United Airlines, the strike we have is 39.40. That trade would be breached at this point. But now you're going out to 12.15. So there is, if you're looking at this, there is some resistance that's over here. But I was just shocked that they popped up like they did. But let's look. If we're looking here, this is where current price is. I'm showing it. I stretched it out so you can see more of what's happening in a larger scale, and then you zero in. But this is the resistance area, is all over here. See these places where all these candles are stopping in that same spot? That's at 41. That's at 41. So that lets you know there's resistance there, and potential of that turning back is there. There's also one here. Let me zoom in a little bit. On what day is this? October 17th. October 17th, there's also some resistance right here. October 17th, the resistance there is in the $40 range, which may be why that 39.40 is there, believing that you hit the resistance and then it drops back a little bit between now and your expiration of the 15th of next month. You got some time. You got time today. You got some time. If you did the United Airlines, or you could have done a put credit spread on that and got underneath here, since it's been popping up a little bit. Maybe underneath this gap, you want to use the gap as some support. Just know that gaps are support. They act as support, or they can act as support. Nothing is ever everything. Okay, so just know nothing is ever everything. Some stuff happens, and now this is probably a resistance even here, support, I mean, right there, because of that $38. So somewhere in between those two could be. So the United Airlines, the trade that was originally written here for 12.15 at this point is breached, right? You got a little more time with it, but people usually don't like it when their trades are breached. You need to make sure that you can chart and be comfortable with what is looking like. You want to know what it's looking like if you're staying there in your trade. All right. Oh, thank you. Buy the rumor, sell the news, or at least that's how I remember it too. Buy the rumor, sell the news. We know people. All right. Angela and Tamar know each other. Whoop, whoop. Good job. Good job. Good job. Let's see what else we got going. What else we got going up here? Our next trade we were looking at was General Motors, 28.29. Let me share again. Got to share again. There we go. Allow. 28.29 on General Motors. Call credit spread 28.29. Well, General Motors is just above the 28 mark. It's popped just a little bit above the 28. So the trade is slightly breached, right? Slightly breached. We do have this is one that was for December. Oh, my brain keeps going back and forth to last month. We're not there no more. No more October. Wants to go back one more month, but we've got an expiration for December the 15th. So the strike was 28.29, which is right where we are right now, right in this zone right here. 28.29 call credit spread. The next one was SOXL. Now, SOXL, oh goodness, It just decided, and this was for this week. SOXL was for this week. So this trade is all the way breached. It was 21.522 are the strikes for this one. And SOXL running on up there with NVIDIA and AMD just hanging out with the big boys, because, SOXL is an ETF that is comprised of semiconductor stuff. It's comprised of semiconductor stuff, which is AMD, NVIDIA, Taiwan Semiconductors, yada, yada. We can count them off and add them up. But 21.522 with this Friday's expiration. Now, that means it needs to come down about $1. Needs to come down about $1. I usually look at this trade over here. Do you all ever look at the plus minus number over to the right? This plus minus number is the implied volatility, or it's basically what the broker believes the price can go up $1 and some change here, or it can go down $1 and some change. And sometimes I'll use that when we developed our strategy for the SPX Power Hour. We incorporate this number. So if anybody has the SPX playbook, this number, this plus minus number, it has a real name. I call it the plus minus number. But that the plus minus number can be used to determine how much the price may move between now and expiration on this particular date. So this says that SOXL can move plus 1.2 or minus 1.2. Well, if we subtract 1.2, then we're at like 21.4, which is just below the strikes. Just below the strikes. That means SOXL, we need to come on back down. Boop, 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 boop. There we go. But what you do in the situations like that, though, I'm going to tell you what you do in these situations. If you've got a trade and the price is right there at your, knocking at your door, boom, 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 you look on the other side. So with this trade is about a call credit spread. What you do is turn this into an iron condor, and then you go to get a put credit spread and collect some of your montees back. So let's say you have one contract of SOXL at this price and you're not sure it's going to do its thing, then you may go and do two contracts of the put credit spread that's going to supersede. You're going to get some of the money back, and it's going to supersede what you will potentially lose in this trade. So that way you can break even or get somewhere close to that. That's how you hedge, if you want to call it that. If you can go into some more trades that are going to pull in some more premiums, then that will offset the loss here or cancel out that loss. That's how you do that. You turn a one-sided trade into a two-sided trade and get the benefits. No reason to sit idly by and watch. We know too many things to just sit and let our money fly away. I'll fly away. We don't just let our money fly away if we can help it. At least you want less of it to fly away. You don't want it all to fly away. Okay, so the SOXL trade for this coming Friday is now one to watch. It's one that would have to be watched. But what I was saying was, you would then go, even if you pick those same strikes, you would go to the put credit spread side. In this case, looks like you would collect $6 on that side, $7, and you do some of those to offset the loss. Now, the whole collateral for those is $50 because this is a 50-cent spread. So $50. And depending on what you took in premiums, now you want to offset that loss, whatever the opposite of that is. So if, let's say you took in $15, what you could lose in that trade is $35, because the most the trade is worth is the $50. So if you received $15, that means your max loss is $35. So you want to offset the $35 loss if you need to. That's what I mean by all of that. All right. What was our next one? Our next one was INTC. Did we go through all of these on Sunday? I didn't. Oh, yeah, we did, because you know what we did? We came up with the how could you make $500 this week? How could you make $500 this week? Oh, did anybody go forth and go forward with trying to make their $500 for the week using our trades? Ooh, that would be interesting. I think I said too, I'm going to show the graphic in a minute, but I also said that you could also just use XSP and SPX and make your $500 that way. INTC 4041, that trade, of course, again, just the prices this week. INTC is in that tech space as well. And it's you want to hedge that one too. But now the plus minus says that you could come down to 0.9. We've got tomorrow is unemployment claims. Tomorrow is unemployment claims, and we could have a turn back. Listen, none of this is trading advice. I'm just talking about what I'm talking about. It could do. The market does what it wants to do. Okay, the market does what it wants to do. Let's go look at AMD though. AMD was on the put credit spread side of this. AMD, these two were 11/17 expirations, AMD and Coin. And I've looked at these. Both of these trades are doing well. 114, 115 on AMD. AMD is now at 117 and some change. The trade was 114, 115. So it's still going good. And Coin, I believe our strikes on Coin were 87, 88 put credit spread. And Coin is now at $98. That trade is good and good. 87, 88. Coin is running on up there with the cryptos and whatever else, right? So I was saying, let's look real quick at SPX. I don't want to go there yet. Wait a minute. I want to go here first. I want to go look at how we could make our $500 for the week if we wanted to do that. How we could make $500 this week. And I said you could do puts on Siri, Carvana, leverage a lot of collateral for that $500. I don't know if it'll be worth it with that. Credit spreads, though, we had some opportunities. Looks like the AMD and Coin would have paid off. They're still paying off nicely for the week. Cisco was one we took off the list because of the earnings. And SOXL, that trade, if you were doing just a 21.522, would be breached and you would be hedging on the other side. Or you could do the credit spreads on SPX and XSP, which there's some people who are watching our call who do SPX, who are in our community, SPX and XSP. If you're not in our community with that SPX playbook, you need to go ahead and grab that so you can be making your daily money. You can be making your daily money. You can make $500 a week because that's $100 a day. And we return about 10% a day, right? So you use your $1,000, rinse and repeat, pull in your $100 each day on 0 DTE, and you can be making your 500-ish a week. So even if you didn't do the whole 10%, if you added another $250 to your life each week, what do you think about that? Could you do another could you add you another SPX playbook dot? I'm writing it out because Facebook be tripping. You could use an extra $250 a week. So even if you didn't go in with the 10% each day, maybe you win after 5% or 7% or whatever. You win after 25, $50 a day, which would be half of that $150 a day gives you another $250 a week. That's another $1,000 a month. Yes, sir. Can use a little $1,000 raise. That's another $12,000 a year, and you're just using your collateral, the money you already have. Yep. I heard my notification go off. That's why I was able to click on. Oh goodness, I'm so glad you're able to join us, Angela. Welcome to the call. Yes, Miss Deborah, having different strategies is always good because listen, we're trying to keep our tool bag full and active. We want to keep our tool bag full and active. Okay, now I'm ready to go look at SPX. I was looking to see if there was an opportunity for a trade because I'd like for us to be able to do that today. But the market's looking kind of that doji. With the doji, you have to be very careful. And why do you have to be careful? Because that means there's indecision. It can go either way. A doji candle means it can go either way. So you could be thinking, oh, it looks like it's going one direction. And no, this is that doji right there. Nope, I need to go this way. There we go and bring this down. This is today's candle. Which way are we going? Where are we going? Where are we going? Nowhere. We're not going anywhere at this point. So the thing is, when you're in this situation where it's really close like this, you either need to get close or you need to go out further. And the further you go out, the lesser the premiums are because the price action is not moving enough to generate decent premiums. So because price is staying still virtually, our open and close right now is within $1. It opened at 45.05 and we're closing now at 45.06. We're within $1. So you could go outside these candles. So let's say you went up to 45.20, 25, you try to get outside the candle, and you went down to 44, let's say 95, 44.25, 45.25, sorry, and 44.90. Okay, 44.25, 45.25. Duh, come on. 45.25 is paying $5 right now. You're not gonna leverage 500 for 5. No, that's a 1% return. Now, 1% return is still 1% return, but if you're gonna make 5, that means the potential to lose is 495, right? And that's even changed to 0 now. 45.20, which is at the tip top of that candle, is paying $25. Now it's 230, 225, 230. So maybe if you were closer, if I was closer to 330, maybe, but it gives you an hour and a half to ride, and 45.20 is about 14 points away. Our plus minus number is 9. So will it probably stay in there? It probably will. But is it something we want to look into and risk? I don't know. I changed it to single. The reason I changed it to single is because I'm going to look at this probability out of the money column. And for 45.20, the probability out of the money is 88%. That's actually pretty good. 88% chance that the trade will be fine, that strike won't be breached, won't be touched. And 45.15 has a 76% chance. That means there's a 76% chance this trade at 45.15 would be good. 24% chance it won't be. Got to look at how comfortable are you with those odds. I usually will get in the 70-75 range. I'm comfortable with that. Sometimes though, you be sweating and but 70-75 as far as probably have the money, I like that area. And then if we're looking here, 44.95, actually 4,500 is at 75% out of the money. That's 6.7 points away. I don't know if I'd want to ride an hour and a half with a 6-point difference, 7-point difference for SPX. I definitely would want to go outside of that candle. I think 44.90 was what we saw on the candle, was the bottom of this. This was the low, was 44.95. So you could go with 44.90 or 95. That's an 88% or 93%. So let's see. Let's see if we enter us some trades. I'm in my sim. Okay, I'm the full disclosure by thinking she just putting her live money out there. This is the sim. I'm in paper trading, but this is a good place to practice. Good place to practice. Okay, I'm gonna go with the 44.95. I'm gonna go with 44.95. You would select it. I'm on the vertical screen. You would select it. It's paying $30 right now. 44.90, 44.95, basically saying I would want the price of SPX to stay above 44.95. It must be climbing because the premiums on that trade just dipped from 30 to 20. Price is going up. There we go. We got our 30 cent or our $30, right? And if we were looking at the other side, we were looking at what, 45.15 or 45.20? Oh, why did 45.15 jump up so big? Y'all see that? That's a big old jump. 45.20. The price must really be moving fast, because just this a second ago, or notice how this little thing was barely open and now it's widening out. Because we looked at 45.20 a second ago and this number was I think 25 had gone down to 0. So see, now that you can get a little bit further away, I would go, now that we got $30 on this side, I would go a little bit further away on this side and look at, let me see. I would look there, but let me go look at the chart one more time. I'll go to the chart and let's go to a smaller time frame because we were just looking at the day chart. I would go and pull up the 15-minute chart to see what kind of movement is going on with SPX at this point. And what do the support and resistance lines look like for these other Put some little, this is for the daytime. You always start with the chart. Start with the chart. Start with the chart. Make your decisions based on that. This long wick here says it wants to go up some more. Whoop, whoop, whoop. It's trying to pressure. There's pressure. Right? Okay. So this long wick says I'm trying to go up some more. So we would look 45.18 is the top of today, 45.21. So I would definitely go outside that, like I said, 45.25. 45.25. And then I would select this. I took $30 in on the other side, take 25 in on this side. That means now you collected $55 in premiums. You're going to leverage your money for an hour and a half. You're expecting price to close between $44.95 and $45.25. You want price to close in between those two windows, between $44.95 and $45.25. All right. So we use the plus minus number to help us decide. We looked at the chart and we used the probability out of the money, which you're only going to see that number on the single screen. If you're on single, you see the probability out of the money. If you change to vertical, you see it goes away because it's looking for one strike, not a spread. Okay. All righty, so that was our SPX trade. If we looked at XSP, probably not going to see too much there. XSP needs to be gotten into a little earlier in the day. What do we do? 440. If you did 450, that's $1 away. Actually, 450 might work. And 450 is at 85% probability out of the money, and 452. So between 450 and 452. If you're looking at XSP, we like XSP because it's only a one spread. It's only a one spread, but the 450, 449 is only paying $3. $3. One spread means you leverage 100, not so much. And 452 we looked at, 452 is paying $8. If you put them together, you do get $11, right, in premiums, but the price needs to stay in the middle. And we're looking at a plus minus of 0.9. So that means it can go up 0.9 to 452, or it can go down 0.9 to 450 and some change. So putting them together, not so bad, but you're leveraging $100 to make 11 or 12, which again, 12% return is still good money. I'd rather have it going one direction, but this doji is what has you, a little bit concerned because there's no clear decision on which way things are going. Okay. Who's got questions about the 0 DTE? Anybody got questions there? See if I got some questions in the chat. Nope, we don't have any questions in the chat. All righty. So what I wanted to do is make sure that I come to back in the middle of the week to see what trades we talked about over the weekend. And then we come back and look at them again in the middle of the week and see if there's something we can still put on, because credit spreads, theta decay is our friend. We can get into a Wednesday trade, a Thursday trade, and still pull in premiums. Don't forget, this weekend is the charting. This weekend is the charting workshop. This weekend is the charting workshop. If you need to understand how to do technical analysis with charting, or you know somebody who does, invite them to the workshop, right? There's a link there. Let me put it in the comments in case somebody wants to attend. In case we got some attenders, http educator to trader.mvsite.app/nope charting basics workshop. Go ahead and get yourself registered and join us over there on Saturday. We're going to go over all kinds of stuff to make sure that you're ready to do technical analysis for more months. We need to chart because that helps us with our informed entries, helps us with our when can we exit, how long can we ride to get the maximum amount in our profits. We want to enter at the right place, exit at the right place, make sure that we're looking at the candle patterns to let us know that price is turning around, or is it continuing. These are things you need to know. You need to know these things. All righty. Just like every other day in here, we do two things. Whoop, whoop, whoop. We stay green and we get this money. I will see you in the chat. See you in social media land. Y'all send me messages if you got some specific questions. Send me a message and we can talk about it. All right. Goodbye, everyone. Goodbye.